when it comes to consumption, how is that coming along? Sectorally, any interesting trends that you're seeing in, I don't know, cement or any other sectors that looks interesting to you?
I think all the core sectors, irrespective of what is happening, right, they have done well. And we have seen consistently the capital expenditure coming from their side. If I were to take and from a rating agency perspective, if we are looking at the things now, even if we talk about the entire impact of the possible tariffs, although they keep on changing, right? But even if we try to ascertain, where do we see gems and jewelries? Potentially there could be a negative impact, right? Because it's a discretionary spending which could be there, and the more the markets in the developed economies they're getting impacted, the discretionary spend could reduce. If we talk about the electronic sector, while the recent, I can say, the deal between US and China on this, right, could be a bit of, I would say, a dampener for our future prospect. But nevertheless, from a long-term perspective, I do feel that that sector can potentially do well. I'm just talking from the tariff perspective currently, right?
Sure.
And the other sectors also potentially which we could be looking at, textiles, say for example, chemicals, right, pharma, right. Although pharma currently is out of the purview, right. But I think the way in which the future trajectory is going and I would say the intentions of striking the right deals as per what the pronouncements are, I think we should be better off in terms of taking the benefits on this. From an overall perspective, what I think is that the core manufacturing sector, that should continue to do well, right? Because as I mentioned, once again, the deleveraged balance sheets are helping and we should be in a position to take advantage of that, right? Services sector is continuing to do well once again, right? The banking and financial sector industry, if we look at the capitalization levels are good, right? The asset quality is largely good, bearing on the NBFC side, which have a greater exposure on the MFI or to some extent on the unsecured loan aspect. Bearing that, the capitalization levels are good, so they should be in a position to take care of the things. I think so, if core manufacturing and services sector both are likely to play out well, that is a big indicator as far as the future trajectory for the growth is concerned, which makes us more confident from the medium to long-term perspective.
Inflation, interest rates, inflation, I think the latest print was quite good.
I think that's another positive factor that is likely to play out, and it could not have come, these figures could not have come at a different time to be more helpful in terms of the regulator to take the right decision. I think with this being in place, the regulator would be, RBI would be more confident in terms of going for further rate cuts. Our internal view is that we should be witnessing at least another around 50 basis point cut in the financial year, which once again would be helping the corporate sector.